Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Everyone checking in on the Canadian MJ sector. First off, everybody take a deep breath. In the end, nothing is changing with this sector. We got overextended. We got way too inflated in a short period of time. We ran hundreds of % in a couple of months. That is not sustainable long term. Consolidation is inevitable. It is healthy in uptrends, and it is currently happening. We have lost the daily uptrend. We could very easily consolidate for multiple months as we head into the summer. So we have the psychology of the markets, euphoria, everybody rushing to get in, everybody that wanted to get in got in, and now we are seeing profit taking and consolidation. And another major point is the correlation to the overall markets. As I've been pointing out in these videos occasionally, and just to bring up a post I made on Facebook, and sorry for the terrible cropping, but important to remember if you are just learning trading the last 14 months, and I made this post 5 days ago. Important to remember if you're beginning trading in the last 14 months that this market is insanely bullish, and I'm referring to the overall US stock market. And it will not always be this way. Ability to quickly react to changing market conditions is an important skill for a trader to have. Even if you are Canadian MJ, bulls have been enjoying an extremely supportive market environment. Just words of caution to those who do not know what weeks or months of consolidation in a market feel like. So again, look at the S&P 500. This is the weekly chart for the S&P 500 since Trump was elected. The market has been loving it. I have never seen the market this strong in my entire life. Granted, I've only been watching the market for 8 years, but this is insanity. And the marijuana industry, the marijuana sector, has been benefiting from this. You better believe that rising tides raise all ships. And this is the case for, global markets, for sectors everywhere. And we are watching an extremely significant bull run. Look at this run since September. It's just been all green. You better believe that this run in the S&P 500 has had a significant impact on the bullish run that we've seen in Canadian MJ. Look at the consolidation that we've seen. We have seen only healthy consolidation, and even the consolidation that's just happened today and yesterday is insignificant. We have not broken the 6 weeks in a row of higher lows. We could pull back to 270 on this chart, and this is SPY, which tracks the S&P 500. We could pull back to 270, another 5% down, and still be extremely healthy in the long term. The RSI was extremely overbought at 91. Granted, we were at all-time highs, but again, not sustainable. Normal, healthy consolidation is inevitable. And why I'm bringing this up for the overall markets, you might be saying, well, that doesn't affect Canadian MJ. Well, you better believe it does. Look at WEED on the 5-minute time frame. The candlesticks are WEED. The background here is S&P 500, SPY. This is the 5-minute time frame. Look at them linked up almost exactly in the first 30 minutes of trading, or the first couple hours of trading. They were literally tick for tick. Then they followed each other into the afternoon, and then they broke correlation a bit at the end of the day, not significantly breaking correlation. But just to highlight, there is some very significant similarities. Look at these daily charts on these runs for these sectors. This is WEED compared to the S&P 500. They absolutely are correlated to each other. If the overall S&P 500 in the US market were to pull back 5%, we would see the Canadian MJ sector pull back with it. So that's something to keep in mind overall. We're not in this little bubble where we are immune to global economic trends and activities just because, Canadian marijuana is going to be the next big thing. Absolutely it will be, but you better believe that we're going to be subject to every single market environment. And I've said in videos before, if we were to have another crash like 2008, the Canadian MJ market would absolutely tank. We're certainly not anticipating that, but you better be prepared for that in case it does happen, because in that scenario, fundamentals go out the window. Doesn't matter if this company is going to sell 1 million pounds of marijuana in a year. If the overall global economic market starts pulling back, it's going to weigh on all of these stocks. So just a bit of perspective, some macro global perspective on things. that the sector is related to the overall S&P 500 in the US market. So let's get into the nitty-gritty details of where we stand right now. MJX pulling back on increased bear volume and a close at the low of the day. As I've shared before, when we close at the low of the day or the high of the day on the big three, far more often than not, we see continuation into the open the next day, whether that's a gap down open like we saw today or just a lower open and a push to lower lows. Either way, the point is momentum is favoring the bears, and we're looking down at MJX for the bulls to hold 32.93 support. This is another scenario similar to the WEED trade of last week, where if you see hourly RSI levels getting extremely oversold, and here we are oversold, we were oversold all day. If we see another leg to the downside here tomorrow, we will be approaching daily support of 32.93, and we will be looking for an hourly oversold bounce holding that support level. So it's not the end of the world right now for MJX. The bulls still have an uptrend. If we lose 32.93, that will be a significant bearish development. That being said, we are losing daily uptrends on these individual names. WEED on the daily chart, very bearish break of 30.73. The bulls were trying to stay in their equilibrium pattern. We did not confirm the bullish reversal candlestick from Thursday. That was the red flag, or I should say from Friday. That was the red flag on Monday. No confirmation. And here we are following through. And again, close at the low of the day. We're expecting more downside first thing tomorrow morning. Very key support, 29.50. Then I'm looking at 29.07 and then 25.81. Just getting perspective, looking at the weekly chart. This weekly chart could pull back to $24, $23 and still be in a really strong uptrend overall. And again, when I say overall, I'm zooming out and looking at multiple years. Look at how unsustainable this run-up was to the upside. It was way too much too fast. Again, it's great to think and hope, maybe this will hold and maybe we'll keep running into July. It's just not feasible for anybody that has trading experience and has seen these cycles of euphoria and fear play out time and time and time again. It's the same old story for us traders, and unfortunately, it takes lessons it's the school of hard knocks to get comfortable and to get aware of how these markets work. And right now, there's a lot of people that bought in at the top, and they're wondering, should I sell? And the bottom line is, stick to your game plan. If you don't have a game plan, if you don't have stop levels, those are red flags. Those are part of your game plan that need to change. If you are in it for the long term, you're not worried about selling right now. Your game plan was looking multiple years out. So if you weren't planning on touching it for multiple years, don't touch it for multiple years. If you had a stop loss level, you likely have been stopped out by now. Congratulations. You now have cash to be able to reload cheaper. And if you're short-term traders like myself and many of us in the chat room, you're capitalizing on this volatility, but you're staying mostly cash until we get a clear level of support. So I posted before in these videos on the weekly chart, a couple weeks ago, I said, friends don't let friends buy when the weekly RSI is in the 90s. And this is the reason why, because we know normal healthy consolidation is coming and we're going to get better long-term entries. I will be starting to scout longer-term entries in the upper to mid $25 range on WEED. I'm in no rush to make those entries because this daily chart is in a clear lower high and lower low pattern. And as long as any bounce is less than 35.63, which is our most recent bounce, as long as any bounce is below that level, we stay in a downtrend of lower highs and lower lows. So I'm watching the daily trend. We have not seen 2 green days in a row in this sector since the all-time high. That's very notable. It has now been 3 weeks without 2 green days in a row. So the bears have complete control of the short-term market environment right now. The downside in the S&P 500, which is only a very brief start of what could be, if we get 2 weeks of pullback in the S&P 500, it's certainly not going to help the Canadian MJ bulls. So my game plan is to continue making short-term trades and patiently waiting for long-term entry opportunities. And again, I'm in no rush. If you remember the videos over the summer, we were patiently waiting. I was in no rush to make long-term entries from the summer lulls, and I didn't even nail the bottom. We saw this candlestick. We said, okay, time to start paying attention. And once we got the higher low and higher high, right here is where we made the long-term entry. Did we nail the bottom? No. But by waiting to get that higher low and higher high, we significantly reduced risk, and there was still plenty of reward to be had. So I'm looking for the daily chart to go from lower highs and lower lows to higher lows and higher highs, and I don't anticipate that to happen anytime in the near-term future. So that's where we stand on a general perspective of this market and longer term. Again, longer term trend, absolutely bullish. Weekly chart is nowhere near changing that. Daily trend is now bearish. We could be entering multiple weeks, potentially multiple months of consolidation. That doesn't mean we're going to see these extreme, 5 to 8% drop days, but it could mean, we pull back 2% one day, we bounce 1% the next day, we pull back 1% the next day, and just, see slow and steady drawn out consolidation, much like we saw all summer. And I don't anticipate it to be that long of a pullback, because I do anticipate bullish action as we get closer and closer to July. But again, 5 months is a long time in the stock market world. A lot can happen, and there's plenty of time before legalization is doors open, so to speak. So short-term perspective, anticipating further downside tomorrow. Hourly RSI is getting close to oversold again, at which point I will be looking for entries. And again, just short-term trading entries. I did that with ACB today. So for ACB, let's look at the daily chart. Again, higher low lost. This low of 1221 broke. We closed at the low of the day. I'm looking down at 1155, and then there's a lack of support till 890. I don't anticipate to break 890 anytime soon, so we have to look at psychological support levels, $11 and $10, nice round numbers. But there's a lack of support under 1155, which could see this pullback, see a bit more magnification and speed to the downside. The hourly RSI here is oversold, which is why I was playing it today. And I flipped ACB today, profitable twice, using technical analysis, just oversold bounces. And I chose ACB again because the hourly RSI was oversold. So I was looking at the potential setup to give myself the opportunity to hold longer term, not just a quick flip, but it never panned out. So I made my first 5-minute bullish entry. I flipped it after 10 minutes, locked in some short-term profit right here. And then we pulled back. I made another entry with a stop loss below the low of the day. Very low risk trade getting in here. And then sold again. Actually, I tried to hold it, and I held it all the way through this peak. And then I sold once we pulled back right about here, as I saw that the bulls didn't really have much momentum, and the hourly chart wasn't seeing the oversold bounce that I was looking for to potentially indicate a swing trade. So what I'm doing is I'm giving myself entry opportunities with low risk, because I will stop myself out if we break key support levels. But it's allowing myself the opportunity that if this hourly bounce does get going and the bounce gets played out on the daily time frame, that I will be in a position. So if it doesn't work out, I either take a small loss or small profit. And if it does work out, we get big profit. So that's putting myself in a scenario to benefit, but not exposing myself to much risk. So again, to the daily chart real quick. Bears in control close at the low of the day. Hourly RSI is more oversold on ACB than any of the other bigger names, which is why I am looking at ACB for oversold short-term entry opportunities today. And again, tomorrow we'll be doing the same thing. Checking in on APH. APH broke the low. 1811 breaking was bearish. We're now looking down at key support of 1660. A break of 1660 will be significant for the bears. Look at the increasing bear volume 2 days in a row. Let's look at the weekly chart. If we break 1660, let's put our line right there. Look at the lack of support established on the way up. The last weekly support is 631 and then 1660. We did not establish any support on this weekly time frame between those levels. This is why I call it unsustainable. We didn't consolidate and establish support on the way up. It would be a completely different scenario right now had we gone up for 3 weeks and then pulled back for 2 weeks, up for a month, pulled back for 2 weeks. That's establishing stair-step higher lows of support on the way up. This is just a straight shot, euphoric rocket ship. And the harder you go up, the harder you're going to pull back because of that lack of support established on the way up. So it's all about 1660 support on APH. WEED, it's all about 29.50, and ACB, it's all about that $8 level that we're not near. I think 891 is what I said. MJN, clear bear break. We just broke the low of January 15th. Now, what happened with MJN is that ETF had an overweight holding of MJN compared to the market cap size of MJN. So it really saw huge gains on the way up because it was artificially being pushed up by that ETF buying up holdings to hold his assets. So we have now pulled back and broken that low of January 15th. No other major names that I'm seeing have done that yet. This is a clear bear break. The hourly RSI is extremely oversold here as well. It dipped all the way down to 801, or I should say the RSI was down at 14 on the hourly chart. Excuse me. When you get teens When you get RSI levels on the hourly chart in the teens, you start looking for bounces, absolutely. And we did bounce from $8 all the way up to $8.91. That's over a 10% bounce. That is great volatility for day trading. But the bulls did not follow through with that. We now have an hourly equilibrium pattern. 801 support, top of the bounce, 891 resistance, higher low, 821 support. The range right now is 821 to 891. We'll see which breaks first tomorrow. On a bear break, the hourly RSI is going to be right back to oversold. The weekly chart for the next key support, again, nothing established here on the way up. I'm looking down at 396 as the last key support. I'm not anticipating to head down to those levels. I'm just saying that these weekly charts did not consolidate. So there is quicker movement down because of the lack of support established on the way up. So that's where we stand. Again, I know a lot of people are hurting right now. Use it as a motivation to learn. Many of us in the chat room are not feeling emotions right now because we're either all cash because the charts told us to be, or because we have game plans established. When you're subjecting yourself to the tides of the market, it can seem overwhelming and scary. When you start to focus on technical analysis, understanding the trading game, it makes things a lot more clear. The answer of why things are happening is a lot more clear, and it's a lot less stressful is the bottom line. So again, if you're in a hole and in a position you don't want to be, let it be a learning opportunity and a motivation to educate yourself and improve yourself, because the only way that we can progress as traders is learning from our mistakes and improving on them. So expecting further downside to start tomorrow. Still going to be looking for hourly oversold bounces to play out, and we'll be looking for entries. When we do get a bounce that does play out a bit more significantly, we will look for lower highs to form on the daily time frame. So WED, when we do see a bounce play out, I'm not going to be looking to break 35.63, our last lower high. I'm going to be looking to bounce and set another lower high. When the trend does change, in my opinion, it will come from a lower high, a higher low, and then a higher high. So that's where we stand. Have a whole lot more to say, but throat's starting to kill me. I appreciate you watching. We'll check back in soon.